Hello and welcome to this latest video update for the Henderson High Income Trust. Today I'm joined by Fund Manager David Smith. David, thank you very much for joining me. Now first off, what can you share with us about your activity on the portfolio since December? Have you added any new names, trimmed any down or topped any up?
So the main new holding we've added to the portfolio is National Express, which most people will know as an operator of coaches across the UK, but it's a much more diverse business than that these days. It runs also local regional buses around the West Midlands. It runs regional buses and more long distance coaches in Spain and Morocco, and also runs US school buses out in America as well. You know, this is a business that should prove relatively robust and resilient to any sort of more difficult economic scenario. But we also like the business given the cheap valuation, the strong balance sheet, the attractive cash flows, and the dividend that the company pays. And given the growth that we're likely to see from investing in the business to improve operational efficiencies, it's likely to be supplemented by further bolt-on acquisitions, just to consolidate their positions in some of those cities that they operate in.
Now at the back end of 2018, we talked a little bit about the increasing exposure to US corporate debt. So first of all, have there been any developments on this part of the portfolio? And secondly, can you explain the trust strategy around allocating to bonds and equities? And why might an investor be interested in that?
We moved about 3% of the portfolio out of equities into bonds in the second half of last year. And actually this year, given we saw a rebound in equity markets so far in January and February, actually made a decision to further move more equities into bonds, another 2%. So about 5% in total of the NAV has moved from equities into bonds. And again, where we bought bonds, we've typically looked into the US investment grade sector, so the higher quality names within the US bond market there, just because actually the yields are attractive there. The whole strategy, I think, behind owning bonds within the portfolio comes down to two factors really. Firstly, it boosts your income. So let's not forget the gearing within the portfolio is used to fund that bond portfolio. So where I can borrow at a blended rate of about 2.5%, invest that in a portfolio of relatively stable bond assets yielding close to 4.5%, clearly that's a good way of increasing the overall income for the trust. The second reason is trying to dampen down the volatility. Now what I mean by that is typically a bond price will fluctuate less than an equity. So again, if we get into a more difficult economic scenario, then having more bonds within your portfolio should help lower the overall risk of the company. So that's really the strategy why we have that bond portfolio and why we've sort of been increasing that exposure more recently.
Now, as a portfolio manager, how does identifying long-term trends come into your investment process?
Yeah, so it's our investment process is very much bottom-up stock picking. It's first and foremost, we like to understand our companies, really understand those fundamentals, how it's positioned in its markets, what sort of barriers to entry the company has, does it have a strong brand, balance sheets, all these sorts of good things. And then you come on to trying to work out how those profits that the company generates, how can they be sustainable, how they can grow into the future. And I guess that comes down to understanding some of the trends that the company is exposed to. So trends are a good thing, but it's one aspect of working out why we should buy a company. Something like a TI Fluid Systems, which provides process and critical systems into cars. You look at the fundamentals of the business, it's market leader, it's got high barriers to entry, it plays in a niche market with low competition, etc. That's a good fundamental business, it's got good cash flow, good balance sheet. One of the trends though for the longer term is the electrification of cars, and that has good exposure there. Some of the equipment they supply to hybrids, to electric vehicles, are much higher value than a traditional combustion engine powered car. So actually as electrification of cars grows, actually the profitability of the business should move up. So that's kind of how we think about longer term trends into that investment process.